Everybody's terrified right now in the real estate market. And so I think a lot of people are just like frozen. They're not doing anything. Bottom line is there's always going to be deals to be made. There's always deals to be found. Moving forward, I like the idea of syndication because there's lots of opportunities, putting other people's money to work and helping people recognize that the stock market and their 401k are not the only ways to make money, because a lot of those guys are seeing major hits. So I think syndication is an awesome way to go. And the more you put yourself out there, the more people trust you to handle their money. They want to work with you. I think opportunity is right around the corner as far as bigger deals, bigger syndications.
Welcome back to another episode of the Syndication Show. Today we are very excited because we have our special guest, Jaiden Olsen, and I'm here with my co-host, Christian. And Christian, I would love for you to take a minute here and tell Jaiden a little bit about what PREiShare does and what we're offering to the marketplace.
Yeah, absolutely. So Jaiden, it's kind of cool to have you here. Jaiden and I met the first time at a speaking engagement, right? We were both speaking for the...
Probably a year ago.
It was that long? Has it been that long?
Maybe earlier this spring.
Yeah. And so we were talking to the Women's Council of Realtors, I believe it was. In Cache Valley, yep. And turns out we know so many of the same people. We're in so many of the same networks, and we're doing a lot of the similar things, right?
That's right, yeah.
And so PREiShare, just so you understand a little bit better, and for the audience as well, we are a startup in the syndication space, but we are not necessarily a syndication. Like, we're not necessarily out there going syndicating a bunch of deals. Instead, what we are is a solutions company for those that are creating syndications. Right. I know you just recently did your first syndication.
Yes.
You have more in the works.
Absolutely.
And, that's exciting. And so some of the things that we bring to the table, the one that we think is most innovative, at least from what we're being told, is our liquidity service. Right. So essentially, when you're out there doing a raise and somebody says to you, what if I need to get out of this thing? Right. We're creating that solution to where we're actually building a fund, and we're going through all the attorney's documents. I think as we speak, we've got another call at 10 a.m. tomorrow. Mm-hmm. And once that's finalized, then we'll be raising the fund so that we can go out there and buy those fractional shares in syndications. And so if you think about somebody, a doctor or attorney, put money into a deal, and then a life event happens and they need that money out. Right. We want to be able to help them liquidate at a discount of today's value, not from where they put their money in the first place.
Awesome.
A lot of people have had some big gains over the last few years, and we want to be able to help them reap those rewards, but still create a good yield for our investors into the fund.
Yeah, I think that's super valuable. I'm excited to bring you guys on to the next one.
Yeah, absolutely. And so approved sponsors will just have it written right into their documents that they can, that those shares can be transferred, and should be a seamless transaction. Awesome. In addition to that, we're also adding some of the other things that come up in syndications that seem to be a problem. One of which is if you're out there doing a raise and you're coming close to the finish line, but you don't quite have enough funds. Unfortunately, a lot of people spend very sleepless nights during those last days just hoping to get everything through to the finish line. So what we want to do is we want to have sponsors be approved with us first, where we can basically say, based off of your track record, based on the types of transactions that you're doing, and this deal in particular, we're willing to allot you up to this amount of money, right? Yeah. And we're probably going to need to take some extra GP interest or some sort so that we can meet our yield.
Sure.
But it's there as kind of a lifeline. And that way, on those last days, you can still do everything that you would normally do and raise the funds. And if you don't need it, and sleep at night. Exactly. And but you have us there in your back pocket.
Awesome.
The next thing would be, same thing. If you're already approved with PREiShare, you'll have the opportunity to get access to our pref equity. And so pref equity is a very similar situation, but probably a little bit later stage. Right. Maybe you're going through the remodel, and turns out you need a remediation of some sort that you didn't expect, or the costs of things have gone up, including the cost of money. Right, that's what we're dealing with a lot right now.
Absolutely.
And so when you come to that position, I think that most of the syndicators we've talked to, they're like, we don't want to ever have to do a capital call. Right. Our goal is to not do that. It could be the kiss of death to that relationship sometimes. And so what we want to do is we want to put ourselves in a position to help those syndicators and say, listen, same thing, based on your track record and what you're doing, we're willing to, essentially give you up to this amount of money. And as long as we can meet our yield, then you have access to those funds and you can move forward.
Super valuable.
Yeah.
That's awesome.
Yeah. Jaiden, I would love to know, based off what Christian said right now, I mean, we're getting great feedback from different sponsors, syndicators, operators, whatever we want to call them. What would you be most excited about as a sponsor?
Well, recent example, we just closed a syndication, and you brought up a great point. The money is getting more and more expensive. We were raised, we had all the money raised, it was all coming in really good. Our lender came to us and said, hey, we're not willing to lend you as much as we were a month ago on this project. So we had to bring additional capital to close. And just like you said, in an event like that, that would be incredibly convenient to have somebody in my back pocket that says, hey, here's the money you need to close this deal, and still get everything on time to get the deal closed on time.
Yeah.
And so that's
still
one
sleep
example.
at night.
And still sleep at night, yeah. We were fortunate on this one that we were able to close without having to do a second call or anything that way, because we tapped into our construction costs and the location of the syndication. We've got about 6 months to figure out the construction loan piece, but that's kind of our strategy on this. So I can still think of several reasons that having you guys in our back pocket to avoid a capital call would be incredibly valuable. In addition to that, I mean, liquidity is huge. If I can offer that to my investors, say, hey, I need your money for 5 to 7 years, that can be a hard sell for a lot of these guys. And just to be able to tell them, hey, we're PREiShare qualified, we've got these guys in our back pocket. If something happens in the next 2 to 3 years that you guys need your money back, these guys have your back. And I think that makes me stand out as a GP moving forward with syndication. I think both of those things are really big for me as the GP.
Yeah.
Yep.
Very cool. Well, and then in addition to those things that are helping syndicators, what we also want to do is we want to promote those of you that are doing good deals, that are helping people, get good returns on their money. And so essentially, as we approve sponsors and we're going to have a rating service. So we can essentially rate you based on your, what you've done and the deals that have completed.
Boy, talk about pressure.
Right?
That's awesome. Yeah.
And the beautiful part about that is, as you have investors that are willing to give you positive reviews, you can continue to increase that score over time. And it kind of levels the playing field a little bit. We want those investors to be more involved in the process. We want to put the pressure onto, a sponsor to get their K1s out in time and to, do proper reporting. And we feel like, the thing that I think makes the real estate industry scary, especially from a syndication standpoint, is when communication goes quiet.
Right.
And so we want to create more communication faster, because I think everybody wins in that scenario.
Very cool. How do you guys anticipate helping me as the GP communicate with my investors more quickly? Just to elaborate on that.
Yeah, absolutely. Yeah. So basically, we're going to have our community. It's going to be an online community where investors will be able to go in there. You'll be able to go in there. You can kind of communicate with what's going on. Cool. We can give you ideas from other sponsors of how they have communicated with their staff with their investors.
Yeah.
And things like, for example, Mike Anderson talked to us about where he would actually bring investors on as advisors to his group.
Oh, cool.
And so when you do things like that, can you remember what he called that?
I don't remember what he called it, but he said that the investors that he loved speaking to the most or getting feedback from were the ones that were a little upset with him, because those are the ones that he learned the most from.
I love that perspective.
So I'm not sure if you were going that direction or if you were going, okay.
Yeah, so he kind of taught us that, one of the things that has made him so successful in his career is every time there was negative feedback that was coming to him, instead of trying to shut it down or quiet it, he actually invited those people in and had that conversation, and that helped him every single time become better as a sponsor.
Right. Very cool. There's lots of examples of that where people make mistakes and learn from them and become better.
Yeah.
And I think we take that for granted in so many places. Like, the public perception is, you made a mistake, don't give them any more money. But it should be the opposite. Like, they made a mistake and learned from it and can move forward from it in a more positive direction. And I think that's awesome.
Yeah.
Right. I actually remember Matt Strong saying something very similar of, hey, if you did everything in your power and the market changed or whatever it is, that's still a win, because what you learn from those experiences is priceless.
Absolutely.
Yeah.
Absolutely.
It's part of the tuition that we all pay, right?
Yeah. It's how you become a seasoned investor.
This is true.
It means you made mistakes and learned from it.
So Jaiden, I would love for you to take us back to the beginning of how you got involved in real estate and what your journey has looked like, to the point of you just did your first syndication, right?
Yeah.
So I would love for you to Take us
Well,
back there.
That's a big story.
Okay.
I grew up in central Utah, went to school at Utah State University, graduated with a master's degree in structural engineering. I started school at Utah State after the market fell out in 2008. At that time, I was working as an electrician. And so nobody could find a job. I decided to go back to school, became a structural engineer. I went from making $21 an hour as an electrician to making $20 an hour as an engineer 7 years later with a master's degree. And I was working 60 hours a week, 2 weeks paid vacation. And I said, this isn't what I signed up for. Like, big awakening. I started looking into alternative income strategies. I found real estate. I became very passionate about real estate through various podcasts and lots of books and lots of mentoring from just having conversations with people that I saw in that space, just dabbling a little bit. I ended up buying my first sixplex in 2018. It's a seller financed sixplex. I locked it up for 2% down, 5% interest only payments for 5 years. And that was my first real estate deal, and I was hooked, immediately hooked. At that time, I had a wife and a baby, and I told my wife, I'm quitting my job, I'm leaving, I'm doing this full time. And she's like, nope, not quite yet. That was a year after starting full time as an engineer, and 2 years after starting full time as an engineer. And so I stuck with engineering for a few more years, got my license with the state, and continued to pursue real estate. We did a few wholesale deals. I ended up convincing my wife that it would be okay if I quit my job and tried this for a little while. So in 2019, I quit engineering to go real estate full time. And I really haven't looked back. I'm a full-time entrepreneur. I own my own businesses. We've done over $10 million in transacted real estate in the last 3.5 years, which has been crazy growth for us. And I have to attribute a lot of that to the market for as well as we've done. But we've flipped upwards of $2 million homes. We've wholesaled 18-unit apartment complexes. We've done the multifamily stuff, the short-term rentals, done a development. I did a 4-unit development last year, and now we're in the middle of a 32-unit development up in northern Utah. Tons of growth, tons of experience. And I don't want that to sound like I've got shiny object syndrome, because I'm the type of person that likes to try new things and dive in headfirst and learn as much as I can as quickly as I can. And I think that has played really well to my strengths, because I've learned what I'm really good at, I've learned what I don't do so well, and I've learned what I want to do in the future. And so that's kind of a really condensed history of how I got into real estate and what I'm doing now.
Yeah.
That's amazing. How has your structural engineering helped you in your real estate career?
It's a great question. I think I can't just attribute it to my structural engineering degree. I grew up in construction, so I have all the construction background. The engineering brought a different side of the industry to my purview. And I look at it as I've got my construction background over here, my design background over here, and now I'm putting the real estate piece together. And I understand the project from all the different angles. I understand how to take a project from start to finish. We just did a 3,000 square foot addition on an old home, which is something not every real estate investor could do. Yeah. But to understand the financing portion through the real estate side and the development side, but to your point, engineering, I can walk in on a project and understand the major costs that are going to make or break the deal. I can identify strategies to improve that are unique to my background as an engineer, and understand the consequences of pursuing some strategies versus others. And as a result of that, I mean, I network in this space all the time. A lot of people call me and said, hey, I know you're an engineer. Would you come walk this property with me? Because I don't know what I'm doing when they have cracks or foundation issues, or they want to propose a crazy remodel or something like that. So it's definitely valuable, and it's helped me along the way.
Yeah, probably build some really good relationships by doing that.
Absolutely, yeah.
That's cool.
Absolutely.
Yeah. So your first transaction was what again in real estate in 2019,
Aside
right?
from my primary residence, which we ended up converting to a basement rental, so house hacked a little bit. It was a 6-unit apartment complex in Ogden that I acquired through seller financing.
Okay.
Borrowed $10,000 from my line of credit as a down payment for the project, and we moved forward with that.
So that was your first project other than your primary residence, and then what did it look like after that?
Well, I started cold calling. I did 10,000 cold calls on my own while I was working full time. I had my to-do list of everything that I wanted to do every single day. I was going to call so many people during lunch. I was going to call so many people in the evening. I was going to send mailers, call brokers. I had all my marketing streams just that I was doing on my own in my free time to try and break free of that W-2 income. Mm-hmm. And I attribute a lot of my success to my diligence in accomplishing those things. It wasn't until mid-2019 when I decided I needed to hire somebody else to do this that we got that I hired my buddy to cold call for me. That same day, he found a 18 unit in North Salt Lake that we wholesaled, actually to Clay Rockwood. And
Very cool.
yeah, that's what kind of propelled me into quitting my job on that deal.
Yeah.
Yeah.
So
Well, that's some diligence, right? You put in some sweat equity there.
I absolutely did.
Yeah. It's were there days you just wanted to give up because you're like, this is just too much?
Yeah.
Yeah.
Like, even though the market was really good at that time, there was days when I thought, oh, this is impossible. Nobody can find deals right now. But I think it's important to surround yourself with like-minded individuals and ignore the crabs in your life who are telling you that you can't accomplish your goals, and talk to people that are actually doing deals and making things work. And that's when you really start to find momentum and feel like your life can really change through smart financial decisions and investing in real estate.
Yeah.
Well, and I love the fact that you said you had it all numbered out. I think there's a lot of people out there that they see somebody that in, 4 years, you've done over $10 million in transactions. For a lot of people, they look at that as like overnight success. And then they look at what they've been doing and they say, oh, why am I not there yet? But when you track what they've done, oftentimes they've done maybe 10 calls total rather than 10 calls before lunch like you were, right?
Yeah.
And so that's the big thing, is when you actually have those numbers and those metrics and you can look at it, as soon as you get that first deal done, you can backtrack that and say, okay, now I have a formula.
Right.
And if you build off of that formula, I think that makes it a little bit easier mentally to say, we can continue this forward, and I know I can do it. And then, like you said, you can start to scale.
Yeah.
Absolutely.
Yeah.
Yep.
Do you have a deal that you're most proud of?
One that really stands out to me is this 4-lot development that we did in Midvale. It was 2020 that we wrapped it up. I'm really proud of that one because we walked away when we purchased it with $185,000 at closing. And we had 12 months to get the project done, and we ended up making almost $300,000 on the whole development. So that one I'm really proud of. We structured it with seller financing. Very unique value add opportunity. We can talk about that more if you'd like.
Yeah.
So that one, it was 2 homes side by side that were each on a half-acre lot. The value add there was to get 2 lots in the back to sell to a builder to build homes on, and then flip the 2 homes on the front. So there was a variance that we had to get for a flag lot in Midvale. We convinced the seller to carry the purchase price in second position. So he carried $400,000 of the purchase price in second position for 12 months at 5% interest, which means we brought our hard money lender in first position to cover the $200,000 down payment that we needed to give the seller on day one, plus $185,000 to cover the renovations on the project during that 12-month period. So we walked away at closing with $185,000 in our pocket, no money out of pocket, and we hit the ground running with the city. We did the development. We spent $60,000 on improving the road, getting utilities back to these lots, recording and everything, paying the city all their impact fees, sewer and water impact, and getting the approvals from all of the other utilities. And then we dumped another $100,000 into the properties up front to flip them. And it was tons of fun. And it was really fast paced. So one transaction resulted in 4 deals, and grand total, we ended up making almost $300,000 in less than 12 months. That was a really fun one to do.
That's awesome.
Yeah. It's a lot to unpack as well. So I'm curious, let's go a little bit further. How did you find the deal in the first place? What made you see that opportunity? And then, from there, how did you kind of check your boxes to make sure that you were going to be able to finalize those things with the city before making your purchase? Sure.
Those are all really good questions. I got that one through networking. It was a lead that I'd been working for a very long time. It's actually one that I had done some engineering work on before I quit being an engineer on. So I had kind of a background on the property. The seller was trying to sell this for $600,000 together, both homes, for several months and weeks, and I wasn't quite ready to tackle that project at that time. And he kept calling me and said, hey, I really need to get out from under this. I really need to get out from under this. Would you consider buying it from me at this price? And he couldn't quite get his $600,000 purchase price because a lot of the other people that were looking at that property saw a house that needed a full renovation and a dumpy little rental that was making $600 a month. And so to really come in and see the unique value add opportunity, I had to take a gamble and say, this looks like it's feasible. I had looked at the neighborhood and saw there was a few other flag lots in the neighborhood. I called the city to see what their appetite was to get more affordable housing in this neighborhood. And everything, like stars just aligned. And finally I decided I would write an offer to the seller. And I said, we can either do one of 2 things. I can pay you $480,000 cash up front and you can walk away, or I can make you a partner on the deal and give you the full $600,000 if you're willing to work with me on the terms. Give me to the end of the year. So does that answer those questions?
Yeah, I love it. And so it's kind of that price or terms. It's like the oldest strategy in real estate there is, right? Your price, my terms, or your terms, my price.
Sure.
So, love it.
Yeah.
Yeah.
It's fun to see how creative you have been with the deal that you just mentioned.
Yeah.
Have some of the other deals that you've done, have you applied very similar like creativity to those?
I love creative finance. I think that's the exciting thing that makes real estate unique and fun. I mean, you can make any deal work as long as you get the terms that you want, to your point, Christian. One that we did recently was this development up in northern Utah that we're doing. We purchased this from the seller on seller finance. It was 0% down, 0% interest, and 0 payments for 12 months. So that was a great deal. We had an escalation clause in the purchase contract that says, if we don't get the rezone that we're after, we'll pay you $900,000 for it. In the event we do get the rezone, we'll pay you $1.5 million for the property. And so that was his incentive to give us the deal for $0 on day one and make him a partner on the back end as well. So we're halfway through the process on that one. But that one I bought with $0 out of pocket as well.
And how did you find that deal?
No, that's trade secret.
Okay.
No, I've been looking for land in northern Weber County for a very long time, since they announced the Western Weber expansion project, which takes Legacy Highway and 215 essentially 50 miles further north than it currently is. And when you're looking at land demographics up in Weber County, there's only one place they can build and expand. And with the contracts at Northrop Grumman, L3 Communications, Hill Air Force Base, they're bringing almost 60,000 people from California into that area, which economically, that 60,000 jobs from California is going to bring 5 additional jobs for every job that they bring, just from development economics. And so I've been marketing out Weber County land for a very long time. I was having no luck because everybody who knows landowners knows that they don't want to talk to Joe Schmo who calls them on the phone and says, I want to buy your property. And they don't read the mail. So it's all about having that relationship. And I think that's way overrated in real estate. It's all about the relationship. And so I had to look to alternative industries that already had a pre-existing relationship with these people. And landowners, they have large animals, they have heavy equipment, they have livestock, they have all these things. And so I started marketing to diesel mechanics. I started marketing to feedlots. I started marketing to veterinarians and said, hey, if you guys hear of anybody that's willing to sell land out there, let me know and I'll make you a partner on the deal. So this one came to me from a veterinarian. So I'm very proud of that creativity.
Yeah.
You should be.
Yeah. We definitely want to talk about the syndication that you did. Something that you had mentioned, though, is the relationships.
Yeah.
And this is in one of our previous interviews with Clay, he had mentioned it's all about relationships. So what are some of the things that you do to build relationships with people? Do you attend events? Are you trying to hop on phone calls often? Like, what exactly are you doing to build those relationships?
I'm all about building relationships, like you said. I think opportunities like you guys have presented here is one way to get myself out there and talk to people. Everything that I do, I'm always talking, hey, I do real estate. Do you guys have any interest in talking about that? Because I just love talking about it. But talking to people, doesn't matter where they're from, what they're doing, and we'll get into it with the syndication, but that's how I found that one, was just telling people what I do. I've always said that relationships over profits 100% of the time, no matter what deal I'm doing, because I have one reputation, I have one opportunity to maintain a relationship, and it's as fragile as a china plate when it comes to breaking that relationship. And I think that maintaining your reputation, putting yourself out there, and being true to your word in that relationship is what sets you apart from other individuals when it comes to getting the deal, frankly.
Yeah. Well, I know we have some viewers watching right now, and some of them are interested in getting into real estate or interested in getting into syndications. When it comes to the relationship side of things, like what would you tell them, or like what advice would you give them in terms of like building those relationships with people?
I think that's a tough question because I don't know that there's one right answer. I think that there's a lot of different ways to build relationships. I mean, you can look at it from tons of different ways, especially as a syndication. You can look at, hey, I'm going to focus on people that have money that can bring money to the deals, or I can focus on people that have land so that I can bring the deal. And I think that a combination of all of it is really valuable. But when it comes down to it, just be your authentic self, let people know what you do, and talk to people all the time.
Yeah.
Put yourself out there. And I know that it's exhausting. I do attend a lot of the real estate investor associations, and I know that when I come home at 10 o'clock in the evening and I go home to my wife, I'm like, I am done talking. I can't even do any more of it because it is exhausting. And I'm naturally an introvert. I'm not one to love being out in front of people, but it's rewarding, and I love making the connections, and I love talking about real estate.
I love it. Let's jump into syndications.
Let's do it.
So you just did your first one.
Yes.
And you have plans to continue that process.
Yep.
I mean, let's start off by why are you choosing to now syndicate when it sounds like you've done a lot of creative deals and you've been able to use your own money or or different types of partnerships. So why are you getting into syndications? And then let's jump into and talk about your first deal.
Yeah, so syndication is always something that's appealed to me. I love the idea of bringing return and value to other people. It is intimidating to be responsible for other people's money and taking that responsibility on your shoulders. It's not something I'm unfamiliar with doing the deals that we have in the past. I mean, that's what creative finance always is. You're taking somebody else's investment and they're trusting you with that responsibility. As far as getting into syndication, I think it's an awesome way to use other people's money to leverage it into the deal. I also think that it's a very unique way to give people who wouldn't necessarily otherwise have opportunity to invest in real estate an opportunity to capitalize in a diversified industry rather than stocks or 401ks or other places like that. Does that answer the question?
I believe so, yeah. And it also just comes down to, for a lot of people we talk to, they get to a certain scale where they want to do bigger deals.
Yeah.
And, the one-on-one relationships only go so far, right?
Sure.
And sometimes they're already starting to bring more and more people in. So we've talked to a lot of people that ended up in syndications, not even realizing that they were syndicating. So
Sure.
it sounds like with your background and knowledge in the industry, you kind of understood what syndications were, and you purposely went into this project.
I wouldn't say that I necessarily purposely went into it. Let's dive in a little bit deeper. This deal that I found that I syndicated most recently was one that I found through networking in Alaska. To back up a little further, I had a goal to make $100,000 in real estate, and if I hit that goal, I was going to take my dad to Alaska and go fishing. And this was a few years ago. I got hooked. I kept going back to the same spot, and I talked to the people we would stay with and say, hey, I'm in real estate. If you guys ever see any deals, let me know. And so that one came up, and I was immediately emotionally connected. You guys can judge me for that because I know that it's not a good thing to get emotionally connected to your deals right away. But they said, hey, this is the deal. I quickly ran the numbers. 10 minutes later, I said, yeah, I'll do it, and put it under contract with a $10,000 non-refundable earnest money deposit, which my wife got mad at me for. But it was one of those things where it's like, I know I want to do this. I have no idea how I'm going to close it. And I just went for it. And when I got looking at the numbers and I knew a lot of people had been bugging me, hey, let me know if you've got a real estate deal. Hey, I love that you're going to Alaska. I want to go to Alaska. It's like the stars kind of aligned, and I said, this is my opportunity to syndicate. Because I know people that want to invest their money. I know people that want to be in Alaska. And it's a unique value-add opportunity for me to give my investors an opportunity to both invest and have a place to stay in Alaska. So
yeah. So what exactly was it? Just one unit there, or it was cabins, right?
Yeah, we purchased 10 cabins right along the Kenai River on the Kenai Peninsula. The unique thing about that is they are short-term rentals. I love the economies of scale because it's 10 units, and the unique value add that I was able to offer my investors is, hey, while you're a member of the syndication, come up and fish for a week and call it a tax write-off and make it a win-win for everybody. And so it's the easiest money I've ever raised on a real estate deal is say, hey, you got a cabin in Alaska for the next 5 years. It costs you $30,000 a share to get in, and come up and stay. We'll make a killer return on your investment. The purchase price on that was $630,000, so very low entry rate with very high returns. So
yeah, how much did you have to put into it?
So purchase price is $630,000. We're looking at about a $300,000 improvement. So a bit of improvement, but once we're there, we'll get a $300 nightly rate, $300 a night for the 10 cabins. And Alaska is seasonal, so we get about 100 days out of the year, but you're packed. So each cabin, we're into it about $60,000 to $70,000, and we're going to be turning $27,000 per cabin for that 3-month period. So the returns are just incredible.
Yeah.
So I'm curious with that because you said $10,000 non-refundable.
Yeah.
And wife was not comfortable with that.
She didn't know that to start.
Okay. So what was your time frame? Did you build an extra time frame for that, or did you just know that this was something that you could get done?
I knew that it was a deal. I wasn't necessarily sure how I was going to do it. Our initial timeline to close, I said, is 30 days. That was a super big mistake on my part. I immediately, once I realized how I was going to fund this and what I needed to do, and after a conversation with my lawyer, I immediately filed for an extension before our due diligence period was up, which really didn't mean much. But we extended to 45 days from start to finish, and we closed it, which was an incredibly fast timeline for a syndication. Yeah. And it's just the stars aligned for us. I can't put it any other way.
Good work.
But, yeah,
That's great.
Yeah. I would love to know, so how many syndications have you done?
that was the first.
First, okay.
Yep.
And I would love to know, this is something that we rate our sponsors on. This is something
Yeah.
that we love to ask our sponsors. What does your team look like for the syndication that you've done, but also kind of, are you going to stay in the syndication space? And if so, like, what does your team kind of look like going forward?
Yeah, after doing this first syndication, I fell in love with the process, and I've been very surprised at how many people have reached out and said, hey, I've got this other opportunity here. I know you guys are doing short-term rentals. I got another opportunity here. The property manager that we've got working with us in Alaska says, hey, there's this guy down the river that wants to sell his property, and it's very much the same. So we're looking at doing something along those lines. So, I mean, doors just open up, and it's just a matter of saying yes and no to what you want to pursue. As far as the buildup of my team, I have an operations manager. He's doing all of the, he's got lots of experience in the short-term rental space, so he's kind of managing the property. We have a property manager on site, so he's the one that's having constant conversations, paying the bills, making sure cash flow is coming in. He's full-time on my team. In addition to that, we have a bookkeeper who's strictly dedicated to our books. And she does all the accounting. She's responsible for sending out our quarterly packets to our investors and making sure that all of our K1s go out on time every single year. And other than that, it's just me. And so very lean team, but I think we serve our investors very well. And I personally maintain all the conversations with our investors right now. I anticipate as we grow that won't be the case. This first deal, we had 12 people that participated in our syndication, so it's fairly manageable. But right now it's just me doing all the communication directly with them.
And what does the communication look like? Is it like text messages, phone calls, monthly emails, weekly emails, quarterly updates? Like, what does that kind of look like?
Yeah, I mean, a lot of these were friends and family that have had previously relationships with. Some of it's text message, some of it's phone calls, some of it's emails. It's an on and as needed basis, other than we do have firm quarterly updates that we send out every single quarter. In addition to that, that's when our payouts are. So they should get an update, and then the payout will come about a week later.
Nice.
So,
see, first syndication, and you're already on top of things.
I mean, I recognize the serious impacts of taking that security responsibility and file everything with the SEC. I know that there's a lot riding on that, and I didn't want to mess it up. So I just decided to hire all the right people and get it all in the right place to start.
Well, and that's the second part of this. So you talked about your internal team. What about external? I mean, you already talked about an attorney.
Yeah.
Who are the other people that you need to have in place for this first one, and who do you anticipate having in place for future transactions?
Yeah, property managers are always key to success. And I think that one way to incentivize property managers is to do a really good job is by making them a small portion of the GP. And I do plan on implementing that strategy in the future, depending on relationships with those people. If I feel really good about it and I want to give them that incentive, I think that's a great way to help the project be successful on day one. You mentioned attorneys. Attorneys are invaluable, especially ones that can close the syndication in less than 30 days from the time we hired the attorney to the time we closed. Lenders are going to be key as well. Like I said earlier, with this deal, halfway through the process, our lender called and said, hey, we're not able to lend you the original $450,000 we were going to. You need to bring out an additional $200,000 to close. It's like, okay, well, how are we going to do that? So we had to restructure things on our end and have those conversations with our investors to say, hey, this, just so you know, this is what's happening. We don't need any more money, but our strategy is changing a little bit from our initial conversation. Shouldn't affect timelines at all, shouldn't affect returns at all. It's just having those conversations. So property manager, lenders, lawyers, and I think another key aspect is good bookkeepers and accountants who are able to perform on those, answer any questions from me or my investors at any given time. And I have a very responsive team. I can send them an email, say, hey, send my taxes or send taxes to so-and-so, and they'll have it done within a couple of days. They've been very good to work with.
That's great.
Yep.
And I mean, it sounds like you built in some cushion, which is a smart thing to do,
Absolutely.
right? You would rather have more money and give some back than not have enough and had to ask for more.
Yep.
But talk to me about that restructure. You said you moved some of the construction financing or the construction money into the financing.
Yeah.
So now are you going to be stretching it out over time, or is there something different that you're doing there in order to still get those returns?
Yeah, so initially our plan was to have one closing to start with, pay cash for all the renovations, and then have one refinance on the back end. After talking with our lender, that strategy wasn't going to work, so we had to put more cash up front. And because we're in Alaska, construction can't really start until April, so we've got 6 months to figure out a construction loan to get the renovations completed. And so we'll have a refinance at the construction loan. And then once the construction loan's finished, we'll have a third refinance. And at that time, we'll pull cash out, pay off a lot of the equity our investors have given us, and then just maintain cash flow for the long term.
Right.
And so that one changed a little bit just because we had to add a refinance. But I think it's super important to have those conversations with your investors so they understand what's going on, because that's key to any success is communication. And I know we touched on that earlier.
Yeah.
Yep.
And in that scenario, when you're refinancing, there's a lot of different ways it can be done. And I think a lot of people get confused on this. So when you pay off your limited partners, what is their position at that point?
So I think it's important to understand the structure of the syndication, and I may be totally off on this, but this is how my lawyer explained it to me. We have our operating cash flow, and that's what's paying off our quarterly dividends to our investors. So we have the operating cash flow, that's dividend cash flow, and then we have our capital returns, which occurs at the refinance. And so our goal with this whole process is to take each share, which is worth $330,000, and at the time of the refinance, we're going to give 100% of that capital back to the investors so that any return after that point will be an infinite return. So their cash is back in their pocket within 2 to 3 years. But that's another reason that I wanted a good bookkeeper, is so that we can keep track of the operating cash flows and then the capital returns. And when you're talking about preferred rates of return, those are both taken into account separately based on the refinance and when those things happen and how much you're returning and when your stabilization period's up and when you actually start giving back dividends to your investors. Does that answer the question? It
does, and that's exactly what I was kind of looking for. Is I love that model of syndication where ultimately people get a infinite rate of return in a very short amount of time. So a lot of people think I'm putting this money in there, and then I'm going to get my money back with the return, and then I've got to go find the next deal. But in this scenario, they get to find the next deal, but they also have their money continuing to work for them.
And one thing that we've been sure to maintain is that communication with our investors. We say, hey, just so you know, cash flow is going to be heavier in the first 3 to 5 years after we get that stabilization. But once we get that refinance and you get your capital back, that cash flow is going to drop back significantly. But understand that's an infinite return on your investment. And so maintaining that communication, making sure they understand from day one is going to be critical to establishing or defining success, because that's really all it is just how do you define success, right?
And they get to stay at the cabin.
That's right.
I mean, come on.
Yeah, that's the creative perks that we like to offer. Yeah.
Yeah.
So talk about that scenario. It sounds like some of those people may have multiple shares. Do they get multiple weeks?
No, we haven't crossed that bridge. The numbers definitely work for them to have multiple weeks. And so for those that have multiple shares, I think what we've talked about is that you guys can bring larger groups up at a time if you want, because the cabins sleep about 6 people. And we've had some people reach out and say, hey, I want to bring my family up. We're a group of 12. Can we get 2 cabins? It's like, sure, just you don't get the next year. Stuff like that. So we're trying to be flexible with it. Colin, my operations manager, is going to handle all that because he knows the Airbnb stuff better than I do.
Got it.
Yeah.
Let's talk about, we know why Alaska, because you love going there and you love fishing.
That's right.
But why specifically this area, and what's making you think that you're going to buy the one right down the river? It sounds like that, there must be some really good things going on there. Yeah,
Alaska's a really interesting place. The town of Kenai, where we're at, is a population of 8,000 people per year, year-round, or 8,000 people year-round. During the fishing season, it jumps up to over 50,000 people. And so you talk about volume of people coming into that place to stay, to fish, to do all these activities. It's incredible. There's so much opportunity there. There's lots of opportunities to expand on this property. We have 5.5 acres with infrastructure to build 2 more lodges. We can put more cabins. We can do RV pads. Lots of opportunity to add value. But Kenai in particular, they're 10 minutes from the airport. We're 10 minutes from Walmart. So we're not so remote that you don't feel like you're there. It caters really well to the Airbnb or the short-term rental space because a lot of these people are flying from the lower 48. But also, Kenai is known for its incredible amount of salmon that come in. And so the locals from inland Alaska all drive their RVs out there and they want to stay for a week. And so during COVID, for instance, I was talking to the property manager and a lot of people couldn't leave the lower 48. He's like, we didn't see a slowdown because during the peak salmon periods, all the locals come down and they take a big net, and the locals are only allowed to, or they have different regulations. So they can pull 25 fish a day out of the river. And they just, it's a big deal. The whole industry revolves around fishing. But in addition to that, you've got the national parks. You've got a lot of sights to see. You've got the ocean that's just a minute away, like 5 minutes down the road. So there's an infinite number of things to do. I wouldn't say that the population or the appreciation of the market's going anywhere, but I think a lot more people are getting turned on to the Airbnb space, and the fishing is it's one of a kind.
Yeah.
You can't do anything like it anywhere else in the world.
Well, we might have to do a business trip up to Alaska to do some interviews.
Well, actually, now that you mention it, we are talking about doing like investor meetups up there because late season is kind of tricky. And so late September, come up there, fishing's dead, but get people up there just to see the beautiful sights that Alaska has to offer. And I would love to bring you guys up there.
Oh my gosh. Okay, Jaiden, we're going to have to talk about that one.
I think we should also mention that if we approve you for top off and we end up topping off your next deal, we also want to have
all right, there we go.
I don't know how we're all going to do that when we have all these partners, though. Yeah.
No, we'll all go together.
We'll make it happen. Whatever we need to do.
Yeah.
Very cool. Well, I'd love to get into giving some advice to some other people. I mean, you have seen so many different aspects of the real estate world.
Yeah.
And so let's talk to, somebody that is, maybe they've been through the transactional side of real estate and they're looking now that they want to start getting more of a passive income.
Yeah.
What are some tips that you would give them?
Well, I don't know that I can necessarily speak to the transactional. I never became a realtor. I don't know a lot of that side, but anybody that's working a W-2 job that has a desire to get into investing, I think is in a very similar situation. The number one thing that I can advise anybody to do would be to take action. Don't let fear of getting in the market keep you from getting in the market, because there's always opportunities. It's a matter of surrounding yourself with people who are having success, consulting with them, asking them questions, because I don't think you'll find very many people in the industry who say, no, I'm not going to talk to you. It's a relationship business. Everybody's in real estate is in the business of maintaining relationships and giving back. So anybody that I've talked to that says, hey, can I pick your brain on this for a second? They're more than happy to talk.
Yeah.
And I love that about being in real estate.
Did you say that did you ever get your license?
Never got
No. So you were just like, I know that I want to do real estate investing, and then you just like dove in.
To start out, I was really stubborn. Like I said, I'm only going to focus in multifamily. I'm not going to be a real estate agent because that doesn't suit my personality. And I knew that I wanted to think bigger. And I think that it stopped me from getting a lot of deals, but it also forced me to look at doing bigger stuff, which, I mean, not many people can say that they got a sixplex as their first deal in real estate. And I'm sure that there's people who have done much larger than I have.
Yeah.
But I think that just being stubborn enough to stick to something and not listening to everybody else say, oh, you got to get your license. Oh, you got to flip homes. Oh, you got to wholesale. Do all these other things. I mean, you can dive in wherever you feel comfortable and confident.
Yeah.
And just do it.
It seems like the track record of some of the individuals that we have interviewed, they started out as an agent, and then it kind of, then wholesaling, and then certain things, and then they found themselves in a syndication, even if maybe there were only, 3 or 4 investors in it. And so you were just like, not going that route. I know what route I'm going, and it seems to have worked out for you so far.
Yeah, I think so. Yep.
So what are some of the things that you look for when you're analyzing a deal? Obviously, when something comes across your plate, you want to be able to analyze it quickly and decide, is this something that I even want to pursue any further? What are some of those key things that you look at from the get-go?
Well, I think everybody that you talk to is going to have their numbers that work for them. For me, it's going to be unique value-add opportunities. For instance, that development in Midvale, we saw the opportunity to add 2 more lots in the back. That was one that not everybody would even look at or even be willing to tackle. A 3,000 square foot on a home that didn't have a layout that was functional for anything. 3,000 square foot addition, most flippers wouldn't touch that. Other deals that have a unique value add, like the sixplex in Ogden that I bought, was $0 cash flow on day one. I bought that thing with negative cash flow. Saw the opportunity and decided that I was going to go for it. But unique value add opportunity, I think, is one thing that, that's how I had to separate myself when finding deals in a competitive market during the last 3 to 4 years. In addition to that, if we're looking at buy and hold, I want to see somewhere between an 8 and 10% cash on cash return with a north of 12% on the overall return. And any opportunities that I can get to keep my money out of the deal and get somebody else's deal. My returns are infinite, and I can always be creative with how we tackle the deal.
Yeah. So I talked to Clay Rockwood about this. You said you wholesale the deal to him about, I don't believe in balance. I believe in harmony, right? In all things. Yep. So it's hard to balance life, but you can have harmony. And you've mentioned multiple times your wife and her interaction with you being an investor. Tell me, how do you create harmony between personal life and running a business?
That's a great question, and it's not one that I have a lot. It's not one that I'm great at. I'm still figuring it out. For me, I found that life ebbs and flows. There are seasons and periods where I am all in, like 100% of the time I am just doing real estate. And I know that it's hard on my wife at times. But for instance, this last summer, I almost took 3 months off, and we traveled. We went to the Caribbean, we went to Honduras, Belize, we went to Alaska, Bear Lake, Yellowstone, took the kids. And I think it's about finding that balance, building trust, and maintaining that relationship, and finding somebody who can be your cheerleader. My wife's my biggest cheerleader, and she'll support me in anything that I'm wanting to do. But it did take a long time. Like I said, when I was working as an engineer, she was not ready for me to quit my job as an engineer with all the benefits and all the secured income. I had to prove to her first that this was actually going to work. And now the fact that I can go drop $10,000 on a deal without even talking to her. I mean, we have that trust. I'm not saying that that's wise, and I wouldn't advise anybody to do that. But it takes time to build that trust and say, all right, we're in a situation where now we can take those kinds of risks.
Yeah. What were some of those things that you put in place to help her feel the security she needed for you to go full time?
Yeah, before I quit my job, I put 8 months of expenses in the bank. So I had to really dial in our budget. I had to look at what if I don't make any money in real estate, what is this going to look like? In worst case, I mean, bottom line, I said, worst case, if I don't make any money in 8 months, I'm just going to go get a job again. But I have to try this. Like, I proved to myself that there's opportunity here and it's a better way of life. I have to try it.
Yeah.
And so that was my way to convince my wife that it was an okay thing to do.
Yeah.
Yeah.
And I talk about this a lot in embracing the seasons, right?
Yeah.
When you're in the season, be all the way in it and make sure that you have the shifting seasons.
Right.
So I love that. It's great advice.
Yeah.
Appreciate it.
Yeah. And we like to ask this. Christian is great with his questions, if you haven't seen so far or heard so far. Where do you think the real estate industry is going? And in terms of like syndications, what's kind of your plan with that going forward with the current state of the market?
Sure. I mean, everybody's terrified right now in the real estate market. We're not seeing a lot of movement on the buying or the selling. Anybody has listings sitting on the market right now, a lot of them are just seeing price reduction after price reduction after price reduction, and buyers still aren't willing to budge. They're looking at these interest rates. I mean, we locked in our Alaska syndication at almost 9% interest, which is an incredibly high interest rate compared to 6 months ago. And so I think a lot of people are just like frozen. They're not doing anything. That being said, I don't know that our local market here in Utah is going to go anywhere. I think we'll see a pretty good rebound in the spring. I think interest rates are going to back off a little bit. I don't know that the Fed met yesterday. I don't know that they're going to raise it anymore in the very near future. I wouldn't be surprised to see them back off beginning of next year. But bottom line is there's always going to be deals to be made. There's always deals to be found. Moving forward, I like the idea of syndication because there's lots of opportunities. I think that putting other people's money to work and helping people recognize that the stock market and their 401k are not the only ways to make money, because a lot of those guys are seeing major hits, even worse than a lot of the real estate that we're selling right now. Major hits in the stock market, and help them diversify and get into alternative investments. I think syndication is an awesome way to go. And the more you put yourself out there, the more people trust you to handle their money. They want to work with you. And I think opportunity is right around the corner as far as bigger deals, bigger syndications.
Yeah. Are there specific markets you're watching? We know Alaska at this point, you kind of have your niche there. But in addition to that, are you doing anything here in Utah? And is there any other markets that you're specifically targeting?
Something that I'm currently looking into, I mentioned this development we're doing in northern Utah. I'm interested in structuring. So I've got my seller finance note coming due in March. And I'm potentially interested in looking at putting together a syndication on the development side. And that's something that I've never even looked into. It's intriguing to me because I think that there's a lot of potential upside to that. Obviously, there's a little bit more risk with the syndication. So development opportunities, I'd love to get into more syndications with the development. Short-term rentals, I think that Alaska is a great place to start because the price point is so low. I think that it's not unfeasible for us to look into Hawaii and say, hey, you got $400,000, you want to have a week in Hawaii every year for the next 5 years, let's syndicate this thing and go buy 10 rentals in Hawaii. I love that model of the short-term rental space and syndicating more deals like that. It only works on scale. You can't just buy a one-term or one-unit deal out there and make it work. But in addition to that, we've been writing offers on multifamily in Idaho, Texas, Utah, and Arizona. It's been a challenging market for the last 4 or 5 years with lending on those bigger deals. It has been a little bit more challenging, different challenges in the last 4 to 5 months. But I think moving forward, there's going to be opportunities that we want to capitalize on and put people's money to work.
That's great.
Yep.
Is there any other things that you would like to share just with, if you were to give a message to the real estate market, what would it be?
I think the biggest advice that I could give anybody would to be, don't let fear stop you from getting into real estate. Like, everything's scary. The scariest thing, in my opinion, is to have one source of income from a W-2 job because you're only one step away from poverty. Just embrace the fear and have faith in yourself. surround yourself with people who can help you find success and get it done.
Yeah.
Yeah.
Well, Jaiden, if any of the viewers want to connect with you or find where you are online, like
Yeah.
where can they find you?
You can find me on social media, Instagram, Twitter, Facebook, at Jaiden Olsen 23. It's Jaiden Olsen.
Okay.
Or yeah.
Yeah. If you ever consider changing your social media handles, I think it needs to be Creative Jaiden.
Hey, there's a good one.
There we go.
I love it. Well, for now, reach out to Jaiden Olsen 23 and tune into the next show.
Thanks, guys.
Accredited investors only.